always, we're going to be talking about Eli Lilly today. It's the one company in the Alpha portfolio that is not really tech heavy. It has nothing to really do with technology. It has to do with our human bodies. So why are we so interested in this one particular position? So we're going to talk about the positions in the Theta Alpha portfolio, what to look at in the next few weeks. Last fund update call, we covered seasonality in an election year. So if you haven't had a chance to listen to that, please do so. Seasonality election year is pretty interesting. June, July, and August are positive months in an election year. September and October are not. And then you resume that rally in the latter half of the year. But looks like with the Republican presidency coming on, and not being political, of course, that's generally viewed as a good thing for the markets. So we'll see how that plays out. But generally speaking, these election years are pretty good for the market. All right.
So let's go backtrack there, Omar. So
Absolutely.
On the last slide is yeah. So obviously myself and Omar are online here. In place of David Jarvis is Scott Eicher. He is the portfolio manager at or a portfolio manager at Quartron Capital. That is Theta IQ's IFM. So this for regulatory and disclaimer purposes, we need to get that out there. And now we can move on to the next slide, please.
Okay, fantastic. Let's move on and ask any questions. So Eli Lilly, it is a huge company. It's about $870 billion in assets. Not assets, excuse me, in market capitalization. It's bigger than Tesla, okay? Not quite as big as a company like, let's say, Meta. What do they specialize in? Diabetes, obesity, and other cardiometabolic products, oncology, immunology, neuroscience. I am certainly no scientist, so I'm not going to get too much into the science behind it. But the bottom line is Eli Lilly has been in the news recently because of its anti-diabetic, anti-obesity drugs such as Mounjaro. And now Mounjaro is a competitor for Ozempic and Zepbound. It's a Novo Nordisk weight loss drug, Wegovy. So they have these anti-obesity, anti-diabetes drugs. Now, this was all, happenstance when Ozempic launched, and we know that Ozempic is blowing up like crazy. But Eli Lilly is in a very unique, fortunate position now. The reality is there's a lot of obese people, particularly in the Western world. As the world gains more and more affluence, this is also being exported to other parts of the world. So a lot of people are resorting to these drugs in order to reduce their diabetes or control their diabetes and reduce their weight. Mounjaro, okay, so Mounjaro was launched in mid-2022. Revenue in 2022 was only $480 million, okay? Last year, it earned $5.1 billion. But let's take a look at the future, where we think it's going to go, okay? So this is Eli Lilly's revenue growth in 2024. So although it's not a technology company, it certainly has characteristics of a technology company in terms of how rapidly it's growing. So you can see here, this is the year-over-year change in revenue. Eli Lilly came in top spot, and the stock has been absolutely on fire so far this year, okay? The difference between Eli Lilly and Novo Nordisk recent drugs is these are glucagon-like peptide.
GLP-1 drugs, which is a new kind of technology.
Yeah.
Right? Now, I almost not the scientist, and I don't purport to be.
But we do know this much, Matthew. We know there's a lot of fat people in North America, and that is a very good thing, right? In terms of what.
Well, it's not a good thing socially. It's certainly not a good thing socially. But I'll tell you something. This Theta Alpha portfolio, it is a growth portfolio. As Omar likes to say, this is an alpha portfolio. And alpha right now doesn't just mean AI. It doesn't just mean EV, right? It doesn't just mean cloud. It also means pharma as well, because a lot of these drugs earn a lot of money for the companies that produce them, and they are very, very profitable. And from a sake of, not diversification, as our friend Mr. Buffett would say, but diversification, to get a little outside the tech bubble, we feel that Eli Lilly is not a bad inclusion in the portfolio. Now, yes, it gets down a very, very technical stream about what is a peptide and what's a PD-1 drug. That's great, right? We are considered about the dollars and cents and the overall demand for these products, right? And right now, if you go back to that last slide, Eli Lilly is in the lead here. Yes, there's a whole bunch of different pharma companies that you can see are making drugs. Ozempic by Novo Nordisk, that's probably kind of, I guess, colloquially the most popular one these days. You see these corny type of commercials, ask your doctor if Ozempic is right for you. Well, guess what? It was right for Eli Lilly, and they kind of made a competitor to that as well. And yes, there's a very, very large demand for these drugs, and we want to be part of that growth. And that's why the strategic decision was made to include this as part of this portfolio, because we do believe it has that growth capability.
Yeah. Now, normally, obviously, we're looking at market growth, not the any other implications. If somebody wants to take this drug, and it is largely beneficial for people with diabetes, people with obesity related issues. If if you have over 30% body fat as a male, you're more susceptible to a lot of diseases and cardiovascular diseases. This definitely helps out, although it's probably not the most ideal solution. Exercise and diet is, but that's not everyone's going to do that. Not everyone wants to do that. Let's take a look at the growth rate. The growth rate from 2023 to 2029 is expected to be in the GLP-1 category, 19.2% a year. That is very, very good, because remember, the research and development dollars have already been put in. So once this drug reaches market, it already has, and these drugs continue to grow their revenue, the majority of that, or a good chunk of that, is going to be pure bottom line profit. Okay. So global data, the 5 key drugs in the GLP-1 drugs could be Mounjaro, Ozempic, Wegovy, and Rybelsus, and Cagrilintide. I've never heard of that one. Rybelsus I've heard of, which capture almost 83% of the market by 2029. So remember, that category as a whole is growing rapidly, and we think that Eli Lilly is very well situated. So Mounjaro is predicted to lead in sales, generating $33.4 billion annually. Right now, remember, last year, what do they do? Let's take a look at that number again. Fiscal year 5.1, okay? Those are technology-like growth rates. So from 5.1 last year to expected revenue of $33.4 billion by 2029, okay? Novo Nordisk is expected to be emerge as a leading company, having a large portfolio of GLP-1 drugs, expected to capture 55% of the market share. But Eli Lilly is also very well situated, okay? So Eli Lilly, GLP-1 versus PD-1, and again, these are sales over time. Matthew, you want to maybe explain a bit more
Yeah,
detail?
so basically this new technology is coming forth, and it is overtaking the not to say older technology, but the other technology, right? And you can see, if you are a leader in this GLP-1 type of product, then yes, you're going to be having a competitive advantage here. That's what this graph is supposed to show. And from this perspective, it does get awfully technical. But at the end of the day, these drugs are meant for a wide range of people. They affect a lot. They help a lot of people, and the market share is, if I read correctly on that last page, is like 100 and something. No, go back to the last page, Omar, for a second, please. Yeah, so $105 billion is market size just for these GLP-1 type of drugs, right?
Almost
And if
growing
you
at almost 20% a year, right, Matt?
let's go
20%.
20% a year, and you
That's
have 5 different drugs in the category which you're marketing. So that's positioned for growth. Whether or not you understand, which chemicals are doing what in each drug, that might be secondary in nature to to making this decision. But as long as you see the demand and you see the numbers that make sense, that's what's more important. Obviously, no one here is a PhD in chemistry or pharmacology, but that's what's important to us.
All right, so there's the growth over time. As you can see, the new drugs are expected to overtake, and then the old drugs are expected to actually start declining. But as you can see, these GLP-1 drugs are rapidly growing in popularity and therefore revenue. Okay, so Eli Lilly, they have a product for Alzheimer's treatment, which just recently got approved. It showed that it may slow the rate of cognitive decline by as much as 7 months. So I believe it's been approved now a few days ago, but it could generate also about another $5 billion in revenue annually. And Eli Lilly's weight loss drug is in trials for treating obstructive sleep apnea. So these are a lot of diseases that are today's lifestyle diseases, and they do prolong people's lives. They do have obviously some side effects as well. Whenever you're using a drug to treat something, there are going to be side effects. But overall, if someone's quality of life is improved, because diabetes is a very, very nasty disease. 80% of people with diabetes eventually die of heart disease. So if you can control and contain that, and also reduce someone's body mass index, BMI, and their body fat percentage, these are all good for their long-term lifespans and quality of life. Okay. So let's take a look at our fund. We're doing really well so far of late. We have a lot of money that's been coming in of late, so we're deploying it as it comes in. So if the market does take a bit of a dip, guys, we've got a lot of money coming in the pipeline. We've got some money coming in the next little while from RBC as well, and that could be far more than we already have. So we're really starting to grow quite quickly from here. We got Alphabet at 6.7%, so we're a little bit underweight on Alphabet. We're a little bit underweight on Amazon. We're a little bit underweight on Apple. Luckily, we are pretty good weight on Microsoft, Tesla as well. We're fully weighted on Tesla. AMD, we're a little overweight, but nothing major. Meta, a little bit underweight. And the reason Eli Lilly shows zero is because all we have right now is naked puts on Eli Lilly. There is no current exposure. It still shouldn't show zero. Oh, my apologies. All of our naked puts were bought back on Friday. My apologies. And this is as of Friday. Taiwan Semiconductor, Nvidia, Airbnb. We got a little bit of Bitcoin. We're looking to increase that Bitcoin exposure, hopefully to 4 or 5%. So stay tuned. And we think there'll be a big, big rally in Bitcoin towards the latter half of this year. But our desired exposure versus our current exposure, we're still on the light side. And the reason is quite simple. VIX has been hovering around 12 forever. Oftentimes, the best thing to do is just sit there and be patient. We've been pretty lucky. We've done well so far this year, and we've had a really nice bump up the last few days because of our exposure to Tesla. So we were writing a lot of puts at the money, around that 180 mark, all the way up to 225 and now 240. We were writing puts at the money. We owned a bunch of stock, so it's really helped us on the upside here. And we probably expect Tesla to continue on a go-forward basis. I think the bottom is in for Tesla. As interest rates come down, their car sales will increase. Their energy business absolutely just did phenomenal. 9.4 gigawatt hours of energy. That was in their delivery numbers that they released a couple days ago on July 2nd. Now, what does that mean? 9.4 gigawatt hours. What does that even mean? That is the equivalent of selling about 70,000 cars. Okay. So when Elon has talked in the past that he expects the energy business to be as big, if not bigger, than the automotive business, that's what he's talking about. And now it's really starting to kind of get there. We know in the next number of years, there's going to be insatiable demand for energy. Why? Because you have to train AI, electric cars, electric robots, Bitcoin mining. There's a huge, huge demand. Data centers, cloud computing, there's a huge demand for electricity. Now, the problem right now currently is you can't store electricity. You either use it or you don't. That's why you have peak hours and non-peak hours, different pricing. Tesla has a solution. The Megapack solution is that storing of energy and using it when it's needed, because you've already got it stored. So right now in Ontario, for example, if you were to use energy at night, it's far cheaper. If you use energy in the daytime, far more expensive. Now, wouldn't it be ideal if you could store it at night and use it during the daytime? That would be ideal. Therefore, no need for peaker plants. Tesla has that solution. So does CATL, and some other companies, mainly Chinese. But Tesla has a strong market share there. And to put that into perspective, all of last year in the entire world, you had about 100 gigawatt hours of storage deployed around the world. Okay, these are these big giant batteries that store energy. Okay, Tesla did 9.4 billion in the first 9.4 gigawatt hours in the first quarter, and their second factory is just going to be coming up in the latter half of this year, and we should start producing sometime next year in Shanghai. So this is an area which is really rapidly expanding. So although Tesla's had a really good run up, we don't expect that to stop anytime soon. And once Wall Street realizes what the company's about and that their energy business is absolutely destroying, doing fantastic, this stock could run substantially higher. So we will look to keep our full allocation, get fully invested, and hopefully enjoy a very sizable run up here. We're doing really well in the other companies. We're going to continue to accumulate Bitcoin as it's stagnated a bit here, but we will continue to accumulate more and more Bitcoin as well as other companies. Now, hopefully, we get a pullback sometime soon in the latter half of the summer. More than likely, we'll get one in September and October, and that's when we're going to look to get fully invested for the latter half of the year rally, along with all that new money coming. This is why it's so important. When new money is coming in, you can average yourself down. So if you're in a position where no new money can come in, that's not a spot you want to be in. Okay. All right, let's take a look at exposure. So we're at 68.6. That means out of every $100 that are in the fund, between long positions, so stocks we own, and naked puts, there's only 68%, 68.6%. 32% is not accounted for, and that is 31.4. And the reason for that is we're looking for a little bit of weakness. So we're making some pretty good money, but we're keeping that a sizable cash reserve along with new money coming in. We're keeping that on the sidelines because I've been doing this long enough. Matthew, you've been doing this long enough. When VIX is at 12 for now 8 or 9 months in a row, it's only a matter of time before you get a pullback. So we probably will get a pullback. We've been writing a few covered calls, but those have been challenging because stocks often get called away. We only have 18% of the portfolio, 18.2% exposed, okay? But here's the good part. We've collected a lot of premiums, 7.4%. So the fund is doing pretty well. Premiums collected as a percentage of exposure, 9.2%. So we're collecting a lot of premiums. And that's because we've been aggressive with things like, Tesla and Nvidia. We're writing those puts at the money because we want to go long. Worst case scenario, we're getting paid a very healthy premium. So this number is ratcheted up of lately and performance is ratcheted up. But we are going to wait for that pullback. There will be a pullback at some point in time. We've got a bunch of cash on the sidelines. We've got a lot of new money coming in. We have, like I said, our support from RBC and all of you wonderful folk who've been supporting us. So we got tons of new money coming in. The fund continues to grow. I suspect we'll hit about $10 million sometime in August and 15 million or so shortly thereafter, I think in Q3. So that gives us a nice steady stream of money coming in. And these are not numbers we're guessing at. We know this because we know how much money is in the transfer process and how much new money we're expected to get in. So we should be in a pretty good spot soon, okay? Our average days to expiration, 22 days. So short dated. But look at that number, that premium collected number, 7.4%. That's a pretty nice number. If when you're trying to remain, cautious because the market is doing something it normally doesn't do, it's rallying during the summer. That's not, it is somewhat typical during an election year, but the degree of the rally this time around is a little bit unprecedented. It's really rallied. Volatility has been low for a long time. There's going to be a pullback. And when that pullback occurs, that's when we're going to go, all in, fully invested, a lot of new capital coming in. And the new cash coming in can hopefully, give us a bit of a reserve in terms of cash waiting for more opportunities. But these AI themes are just starting to play out. That Tesla thing that you guys saw, that energy deployment a couple of days ago, 9.4 gigawatt hours, that is very telling, not of so much of Tesla, but of where the world is headed. The world is headed in that direction. There is going to be a massive demand for energy. And Tesla not only has the hardware, they also have an amazing software system which allows you to manage it. So this is going to be a big winner. And like I said, people just ignored it. 9.4 gigawatt hours means 70,000 cars sold for the quarter. That's the equivalent. Now, previously, they had never done more than 4.1 gigawatt hours in any one quarter. So we're really excited about the portfolio, guys. If you have any friends or family that are looking to invest, we think we're in a really, really good spot on a go-forward basis, and we would love to have a chat with them. Please let us know. We're all ears. So let's take a look at what do we look for in July. It's historically a strong month, okay? But May and June, May is not. June, and again, this is an election year, so it's a bit different, okay? July is historically considered a strong month for the stock market with all three U.S. indices roughly a 1% over the last 50 years, okay? We got the upcoming rate cuts and we have the elections on the horizon. So July is generally a positive month, whether it's an election year or not. August is less of a positive month. Okay, in normal years, it's a negative month, or maybe flattish. In an election year like this year, it's positive. But then we have September and October. They're the worst 2 months, and they're not good months in election years either. And there will be a pullback at some point in time. The higher the market goes, the more something could disrupt it. It could be one bad inflation report, one strong job number, one poor earnings report from one of these major companies, and it'll just set the market off, and you could see a sizable pullback because people have made a lot of money over the last 6, 7, 8, 9, 10 months, and they're going to want to pull some of that profit off the table. But the good thing is there's also $6 trillion waiting in money market funds. Why does that matter? Because as interest rates come down, you're not going to want to have your money sitting around in the money market funds or bond funds. Why? Because right now you might be getting paid over 5%. So you're like, okay, I don't mind hanging around this money market fund. I get paid 5%. I almost virtually have no risk. I don't mind hanging around this government bonds getting paid 5%. Very little risk. But when that number goes down to 2.5, are you going to want your money there? Probably not. Where will that money go? It'll go into the stock market. It'll go into the real estate market. And this should push the market higher. Plus, these companies, the ones that we invested in anyways, are making a lot of money. They're increasing their revenue and their overall net profitability month after month, quarter after quarter, which is great to see. So guys, if you want to contact us, please do so. If you have any friends and family interested in investing in a fund, we'd be more than happy to speak to them. Let us know. Matthew, let's address questions, and thank you so much for your time as always.